Have you ever felt like no matter how hard you work or how much you earn, the system is always one step ahead of you? It's not your imagination. It's a mathematical reality. While you sleep, high-frequency algorithms are devaluing your currency, and AI models are learning how to do your job for a fraction of the cost. Many financial gurus are still giving you 2019 advice. Save a little, buy this trending crypto, or skip your morning latte. But let's be honest. In 2026, that advice is like trying to put out a wildfire with a glass of water. The gap between the working class and true financial freedom has become a technological abyss. If you feel like the rules of the game have changed and no one gave you the new manual, this video is for you. Today, we aren't talking about saving pennies. We're talking about redesigning your financial structure to be immune to automation and runaway inflation. Get ready, because what you're about to hear is the difference between being a victim of the system or being its master. Welcome to Investor.Mindset. Here, we don't talk about the finances of the past. We talk about protecting your freedom in the age of artificial intelligence. If you're looking for real strategies to dominate the new economic landscape and stop being a spectator of your own economy, subscribe and join our community. Here, information is power and strategy is your greatest asset. Let's dive in. The concept of personal finance that our parents learned, and even what was taught just 5 years ago, is officially dead. In 2026, saving is no longer enough, and picking tech stocks at random is just a desperate gamble. Today, money determines how much autonomy you have in a world where AI and automation are rewriting the rules of employment and life itself, minute by minute. If you feel like money is slipping through your fingers like digital sand, you aren't alone. You're operating with a financial operating system from a decade ago in a market moving at light speed. To thrive today, you need to understand the 3 pillars of new wealth: inflationary immunity, radical skill diversification, and selective minimalism against algorithms. Let's talk about the myth of saving and the liquidity trap. For decades, we were told an emergency fund should sit in a traditional savings account. In 2026, that's a slow form of financial suicide. With the structural inflation we've seen globally, static money is money that loses its soul. Your emergency fund must now be liquid, but productive. We're no longer just talking about bank accounts, but hedge assets that protect you from the constant devaluation of fiat currencies. The key isn't how much money you keep, but what language that money speaks. If all your capital depends on one currency or one country, you are extremely vulnerable. Geographical diversification is, for the first time in history, a vital necessity for the middle class, not just a privilege for the wealthy. The most valuable asset in your portfolio isn't your brokerage account, it's you. But there's a crucial nuance. In 2026, the market no longer pays for what you know. AI does that for free. The market pays for what you can solve that a machine doesn't yet understand. Modern personal finance demands that you invest at least 10% of your net income into reskilling. If your income depends on a repetitive or predictable task, your biggest financial risk isn't a stock market crash, it's a software update. Investing in your judgment, your human network, and your strategic use of automation tools is the only investment with an infinite return. In this era, financial security isn't a stable job. It's the ability to generate value regardless of who your employer is. This leads us to a concept many ignore: the attention economy. In 2026, your attention is a financial asset. Every hour you spend consuming low-value content is an hour you aren't building your fortress. Big tech companies are fighting a war to keep you distracted because a distracted mind is a consuming mind, not a producing one. Wealthy individuals in this new era protect their focus as fiercely as they protect their capital. If you cannot control your focus for more than 10 minutes, you will never be able to manage a complex investment portfolio. Discipline is the new high-yield interest rate. Furthermore, we must address the newest and most dangerous capital leak: algorithmic consumption. We live in the era of predictive marketing. Social media algorithms know you want to buy something before you even realize it. The nickel and diming of the past has transformed into algorithmic spending, invisible subscriptions, and impulsive purchases optimized by behavioral models to break your psychological resistance in seconds. Taking control of your finances today requires an act of cognitive resistance. Audit your cash flow with the same coldness a corporation audits its losses. Every subscription you don't use is a vote for someone else's financial freedom and a vote against your own. Selective minimalism isn't about living in scarcity. It's about deciding that no tech company will dictate how the fruit of your lifetime is spent. To maintain structure in this chaos, update the golden rule for the modern era. First, allocate 60% for living costs. If your basics exceed this, you are over-leveraged and in danger. In 2026, mobility is power. If your rent or mortgage anchors you too tightly to one place, you lose the ability to react to new opportunities. Second, 20% goes directly to growth investments, clean energy, biotech, and the data infrastructure sustaining the world. And the final 20% is for resilience capital. This includes your continuous education and an opportunity fund, prepared for when real opportunities arise that require fast cash. Imagine two people today. One saves $1,000 in a bank. The other spends that $1,000 on an AI agent management certification. In 6 months, the first person is poorer due to inflation, while the second has tripled their earning potential. The risk isn't in spending. The risk is in staying static while the software of the world evolves. Before we conclude, I want to give you a specific tool from the Investor.Mindset toolkit, the 72-hour rule. When an algorithm places a product in front of you that you feel you need, add it to your cart but do not check out. Wait 3 days. If after 72 hours you still believe it is an investment and not an impulse, then proceed. 90% of the time, you'll realize it was just a psychological trick to drain your capital. True wealth today is measured by your margin of maneuver. It is having the ability to say no to a job that drains you because your assets are working while you rest. The freedom to choose is the ultimate luxury. Mastering your economy in 2026 is not an option. It's a survival necessity. If this information has given you a new perspective, take a concrete action right now. Audit your expenses or research one of the assets we discussed today. In Investor.Mindset, we don't just look to accumulate capital, we look to buy our freedom. If you want to keep decoding how to win in this new system, like this video and subscribe to the channel. Leave a comment below with the word sovereignty if you made it to the end. That's how I'll know who is truly committed to their future. Thank you for investing your time in your education and for trusting this space. Keep your vision clear and your mind always in investor mode. See you in the next video.